Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, October 19th, 2009. Well, folks, we are seeing the market on the slight upside today, about $1 on the SPY. The Dow, S&P, and NASDAQ are all positive nicely. The Dow is up about 108 points, NASDAQ is up 18, and the S&P 500 up about 10.5. That's basically 1%-ish, a little less than 1% on the NASDAQ, as the NASDAQ is kind of lagging due to Apple's earnings after the bell. Now, you might say, well, why is it lagging prior to Apple's earnings? Well, because basically you're having a little bit of hesitation on the part of buyers here. As you can see, Apple's up very nicely, but it sold off early, and since then it's come back, but not really up that much, up about $1, and on a $189-$90 stock, that's not exactly big on the percentage side, and you're seeing a little weakness in stocks like that across the board. So watch them very closely, folks. You'll watch for Apple's earnings after the bell. Now, the key on the SPY is more so the level of 110 here. This is an even number play, which is a key level we go over intraday on the chat room and in the research center. We talk about the even number play. Beautifully, I was able to call out the initiation of a short at 110.03, and we were able to take about 20 cents or so in total off that play on the SPY in the chat room today. That kind of play is also gone over in the research center for all of you that are research center subscribers. You'll hear me mention very, very often about the research center even number play from In the Money Stocks. That is exactly that. You can see right up here to the high pivot point, that's a Pierce of 110. That's an even number play. You go the opposite way there, and the pullback, look, 1, 2, 3, 4 bar pullback there on the SPY. Beautiful. Then it pops back up, pulls back, and now it's trying to make its way through this 110 level. The next time through, you do not short it, folks. Remember, you do not look to short this play. The next level you're watching is 110.34. That will be a major level of resistance on the chart, on the intraday, as well as on other time frames. So watch that 110.34 if you should close above 110 and really push through it. We're pulling back underneath, so you can still see there is still a little bit of resistance here at 110 even number on the SPY. Now, again, what's driving the market today, guys? It's very simple, and it's been simple for the last 8 to 10 months. It really has been. Bottom line, folks, check out the dollar. Let's look at the UUP right here. Look at this. The dollar, again, starts to fall really right around 10 o'clock. That's the same time as the market starts to rip higher, and that's all she wrote, folks. I mean, look at this. Market's moving down. You can see this is the dollar chart, the UUP. Here it is. Here's your initial pop at 10 o'clock, and then the reversal down, and you just drop right down, and then look at this drop, and then go sideways. Beautiful sideways consolidation on the UUP right now, but look at that drop. See how that drop starts right at 10 o'clock, right around 10 o'clock, 10:10, and then look, it takes us all the way into about the 11 o'clock or so time frame. Let's take a look here. Look at these SPY. Punch in the SPY. Look right here. Here's your 10 o'clock time frame. When do you start the move up? Right there. Where do you go? Right into the 11 o'clock, 11:30 time frame. That move up takes you right into that. So my point is, notice how the reverse of the dollar is exactly what the market does for the perfect example here. You can see exact time as the market starts to rip up. You see the dollar chart on the UUP, and I'll go back and show you that again. Here it is, right here. See, it's not the first few candles, not the first three. It's on the fourth candle of the day. That's when the dollar starts to tank, and all of a sudden the market starts to rip higher, and the dollar continues to get bludgeoned, folks. I mean, this is really a debacle in my opinion, as the dollar continues to get weaker. You've lost, again, about 30% of the dollar's value in just the last few years, and that continues to be a tax. Remember, that's a tax on the individual because your buying power is getting reduced. So yes, the markets are up about 60% or so, 70% on the NASDAQ from the lows, but subtract off, what we've lost in the dollar in buying power, and your money is not worth what you think it's worth based on that. Now, again, it's relatively minute, and again, most people have that money put away. It's not as big a deal, but it's absolutely an impact. You have to know it. You have to know the inflation on the horizon and all the issues that are going to come with this, and you really have to understand. So bottom line is, folks, understand what you're doing here, what the dollar means here, and notice how it continues to push the market up. Now, why do people love the dollar? Why is the market going up when the dollar is dropping? Well, bottom line is this. It's a commodity play. Have you guys heard the term we use, reinflation? Reinflation is a key term we talk about, and that basically states that the key to the markets is reinflating commodities. So remember how bad commodities were when oil was $150 a barrel? Well, that was negative, but when oil got down to be $30 a barrel, all the stocks in the Dow and the S&P that are oil stocks, which is, again, almost 20% of the S&P is made up of commodity stocks and oil stocks. That's a major, major issue because really those stocks, again, if they were to go up because of oil going goes back up, then the markets will go higher. So sure enough, what you see here is the government and the Federal Reserve trying to do what's called a reinflation rally, which is get those commodities rolling again. You've seen gold hit new all-time highs. You've seen oil move up from basically $35 a barrel now to $80 a barrel, essentially. That's all reinflation, and look at the markets. The markets have gone right with them, and that's the beauty of it if they understand what they're doing. Now, the problem is you can only do that so long before they basically have an inflationary problem on their hands, and where you get hyperinflation and all this nonsense. Even I believe stagflation is going to be an option where you don't have growth and you have inflation. Usually inflation comes, but you also have some growth. The worst case scenario is where you have no growth or slowing growth continuing, and you still have inflation. Then people's buying power really gets killed in the essence of it, guys. And that's just that's the ultimate negative. You never want to see stagflation. Stagflation is really the worst case scenario, and unfortunately, I think there is a possibility. Now, you did close above 110, folks, so this does possibly yield a move up here on the intraday, even higher. Again, you want to see if you confirm it. Remember what confirmation is. A close above of the next candle, above the high tail of the previous candle. That will signal that it's a true breakout. Not that it's necessarily going to go higher, but that when you look for consolidation, you're looking for a bullish push after the consolidation. So remember, that's the key to the charts. That's what we discuss. And again, we teach this all in much, much more in depth in the Research Center, in the premium videos at night, in the Pro Trader Watch List, in the Hot Charts and Alerts, Daily Market Report, Hidden Gems play. By the way, the Hidden Gems play for October in 1 week ran about 50%. Unbelievable action, guys, on that Hidden Gems. And they continue to be the best plays out there in the small cap, mid cap world. And we continue to discover them, and just massive amounts of money to be made. No doubt about it. Now, here again, guys, notice this. So you gap higher on the day. Remember, the markets did gap higher today, again, on a little bit of a weaker dollar, and then the market pulled back. Why did the market pull back? Because if you look at the UUP chart again, and this is the last thing I'll say, is look at this little bit of a pop on the dollar. See this little move up? You have a tail up there. You can see initially you pulled down, then you popped right back up. That's what forced the market down, and again, this market continues to go absolutely with the markets here in the dollar-related nature that is going opposite of whatever the dollar does. The markets will do the opposite, and you can see we just hit the lows of the day and then bounced off of it, and then look at the spiders. Spiders, see that tail, and then you pulled back off. So you made a new high and pulled back a little bit off that as the dollar got to bounce right back up above a penny. But again, you're just 1 penny off the lows, and every time this dollar ticks down, if you break new lows today on the UUP and go lower on the dollar, that will push this market to new highs, and we again could see that 110.34. Your levels are as follows. If we establish ourselves above 10 to 110 here, 110 will be support on the way down. 20 moving average so far is working well. You can see how you came right into the 20 right here and then pushed your way back higher. Let me erase that again. So you can see a little pullback just above the 20 and then a push higher, and that will be support. So if you break the 20, then you're going to look for this line. This is a big line in the sand, folks, this 108, 109.68 level. If you get through 109.68, then you're looking for this next level at around 109.25. So those are all the levels you want to watch, folks, and it's been an impressive move. Again, the lows are being put in early in the day. Remember, I talked about this on Friday. Take a look. When was the low put in the day today? You're right around 10 o'clock, 10:30. When was the low on Friday put in? 10:30. Let's go back even further. When was the low put in back on Thursday? 10:30. When was the low put in the markets? 10:30 on Tuesday. How about on Monday? 10:30 low put in there, and you guys can see this pattern, right? I mean, this is an amazing pattern that's gone on, and again, nonstop. And part of it's the light volume. We have very, very light volume in this market today, almost non-existent volume, and you want to be aware of that. Whenever the volume is lighter, and my big theory is this, folks: if volume is lighter than 200 million on the SPY per day, the markets will be flat to positive. If the volume is more than 200 million, you will have a negative market. It's just that simple. And again, what it is institutions participating. When institutions participate right now, it's selling pressure. When they don't participate, then the average Joe, kind of the non-existent, not so maybe intelligent investor, will just continue to buy little bits, and keep the market propped up. And anyone like the plunge protection team or anyone else, they can keep the market propped up. So it's all in there. Notice the little bit of a pullback here on the markets. You're still seeing no confirmation of the breakout yet, and that is key. Remember, breakout means you have to take out the high pivot on a closing basis of the next candle, and this so far has not happened. We'll watch this very closely. We have pulled back below 110. Join the Research Center, folks. Join the chat room. It is the best investment out there, in my opinion. For $49.99 a month, you get the world. I mean, it's literally the guidance. It will open your eyes and blow you away. The picks will blow you away. We'll see you soon. Take care.